The outlook for the global economy is mixed. The Eurozone is still in a recession. The US economy is recovering, but very slowly still. And now there is a slowdown in economic growth also in China and other emerging markets. What does it imply this for the outlook for the oil market? It implies that demand growth is going to be slower than the past because China is slowing down. There's a recession in the Eurozone, a weak demand in the United States. So on the demand side, there is less growth than in the past. And on the supply side of the oil market now, there is the shale gas and oil revolution in the United States. There is also greater production coming from a number of parties in the world where you have either offshore oil or you have oil sands. So supply is growing at a faster rate, demand is growing at a slower rate. All in all, that would imply that the fundamentals for the oil market are somehow weak and oil prices could go lower. There is, however, one caveat, and it's geopolitical risk. Whenever there is a spike in uncertainty and geopolitical risk in the Middle East, oil prices tend to go higher because of the fear premium, and certainly the question of whether eventually there be a war between US and or Israel on the other side, on one side, and Iran on the other side, remains an open issue. If a war were to occur, of course, threat to the supply of oil could lead to a significant spike in oil prices because of the fear premium or because of actual disruptions to supply. Well, there are several lessons. The first one was that oil prices into the global financial crisis were rising. They were rising sharply, one, because there was still economic growth that was strong in China and emerging markets in spite of the economic contraction in US and other advanced economies. But then oil prices rose too much. They reached a peak of above $145 per barrel by July of 2008. And of course, once the Lehman shock occurred and once the US and the global economy entered a very severe recession, the collapse in demand led to a collapse in prices. And from $140 per barrel, prices collapsed all the way down to $30 per barrel. Of course, 30 was too low, pricing in the probability of a Great Depression. Since then, there had been an economic recovery both in advanced economies and emerging markets, so prices have stabilized to a level that is more consistent with long-term economic fundamental. Oil prices for Brent closer to a range of $100 to $110 per barrel.